going above where it's at right now. Just dormant XRP unlocking from centralized exchanges and moving over into the active DeFi participation. That is what is about to create substantial demand for XRP. What is going on, everybody? Welcome back to another CYPRX Wealth 28 Club podcast. I'm your host, CYPRX, here with my co-host, Mr. Aqua. If this is your first time here on our Friday Lives, welcome back. We do appreciate the love coming out and tapping in with us on this Friday. Every Friday, we host these podcasts discussing and talking about DeFi developments on our favorite projects. Keep in mind, none of this is financial advice. We're here to show you guys non-opinionated, research-based fundamentals that are taking place in this space right now as we speak, to keep you guys in the loop with what's really happening, instead of filling your minds with these outdated, unrealistic, price gouging targets and all these things that these other influencers are pumping out to you all. We're really here to humble you all and get you all to see that these technological innovations are taking shape at a very rapid pace, and you should be paying attention. You should be furthering your education. And in some cases, if you're willing to take the risk, even practicing and testing out, participating in DeFi, on-chain protocols, and so on and so forth. So in today's video breakdown, we're going to dive deeper into the reality that a regulated era is unfolding right in front of us, where institutions are for a fact showing real interest in staking and liquid staking, and the infrastructure to earn yield on our digital assets is being built out right before our very eyes. So we're going to break down panel discussions and official documents that prove that this shift is happening right now. So with that being said, I want to just run back two of the things that the SEC chair said in his recent video breakdown, his panel from just 15 hours ago. First, sharing this with you guys because today's video breakdown is going to be monumental for anybody that is doubting the DeFi ecosystem. Okay, anybody that is knocking it and saying that it's a scam, that it's not regulated right now as we speak. Well, we're going to prove that is incorrect. That is a false and outdated mindset to have. And again, you need to be changing with the moving tides, joining like-minded communities like ours here in the CYPRX Wealth 28 Club, where we keep up to date with the changing fundamentals. So that way we don't have outdated perspectives that maybe mattered back in 2022, but we're in 2025 rolling fast as heck into 2026, and tides are changing. So shout out to Mertz Mumtaz here, hopefully I'm pronouncing his name correctly, on LinkedIn. Is the CEO of Helios, and he said here, the SEC just said they want to take all markets on-chain, unleash decentralized finance, open up airdrops for American, and that the right to self-custody is deeply an American value, and people are still bearish, right? So I want to run back what two video clips that the SEC chair just said, which pretty much verbally confirm staking, right? So just take a second and listen. This is where at about 16 minutes and 14 seconds in today's video, by the way, this was shared by the U.S. Securities and Exchange Commission 15 hours ago. Shout out to the CYPRX researchers for always keeping us in the loop with the panel discussions that go relatively unnoticed. This only has 305 views, y'all. 305 people have seen this. And it's the SEC, right? These are the people that you should be listening to and paying attention to. There's millions of people in crypto, yet only 305 people, including CYPRX researchers and us now, if you're on this live, are tapping into this info, which just goes to show that we're in an era of misinformation. There are so many researchers and influencers out there that are pumping out the wrong information to you guys. And honest to God, I don't know how more people aren't seeing it, that now is the time to really focus on ignoring all of those hypey mainstream influencers that are constantly pumping out price targets for you guys. And instead, now is the time to focus on what matters, and that is cash flow. Turning your digital assets, your idle digital assets, into active assets that are generating you passive income that you can pay yourself with beyond 2030, right? Long-term perspective. So just listen to what the SEC chair said 15 hours ago at the America First crypto panel discussion that he hosted here. Take a second and listen.
To achieve the president's goals, it's incumbent on the SEC to ensure that market participants have maximum choice when deciding where to custody and trade crypto assets. As I've said before, the right to have self-custody of one's private property is a core American value. I believe deeply in the right to use a self-custodial digital wallet to maintain personal crypto assets and participate in on-chain activities like staking. However, some investors will continue to rely on SEC registration.
So he believes that investors should have the right to participate in staking. That is a huge verbal confirmation right there that they're not going to regulate something like staking out of existence. Now, that wasn't the only time that he said something about staking and lending, which is extremely important because we've discussed and talked about, myself and Aqua and people in the Wealth 28 Club, lending strategies. So that way we don't have to sell our digital assets in the future. We can lend them out, borrow against them, buy ourselves something nice, tokenize the things that we're borrowing to generate more yield and pay our loan back to get our original digital asset back, right? We're entering into that era, that future where that's all going to be possible in a regulated environment. And the SEC chair verbally confirmed that at an event 15 hours ago. Take a second here and listen.
Work for their business, provided that framework adequately protects investors. So third, a key priority of my chairmanship is to allow market participants to innovate with super apps. I'm often asked, what do you mean by a super app? Plain and simple, securities intermediaries should be able to offer a broad range of products and services under one roof with a single license. A broker-dealer with an alternative trading system should be able to offer trading in non-security crypto assets alongside crypto asset securities, traditional securities, and other services like crypto asset staking and lending without requiring 50-plus state licenses or multiple federal licenses. Nothing.
Yeah, that was, I see your eyebrows go up, bro. What do you have to say about that? That was huge confirmation right there.
Major confirmation. This is just more confirmation that we are living in a new timeline when it comes to crypto. And everything has changed now, and everything will be changed going forward. And we're going to see the little changes day by day. I mean, when you shared this too, man, this is woo.
And the crazy part is, bro, is not a lot of influencers are talking about this. They're still out there saying that staking your XRP is a scam and la. And I'm telling you all right now, what you're going to see over the coming years is you're going to see whales, real whales in the market that hold millions of XRP. They will be taking their idle XRP, a portion of it, and generating yield with it. And even in some cases, Ripple is a company that wants to generate revenue, and they hold a very large bag of XRP. I would not be surprised. I'd speculate on Ripple allocating a portion of their XRP to a protocol like Firelight that is built for institutions and retail and generating yield on it, if I'm being completely honest. Now, I'm not saying that that's going to happen right away, but I think that it is healthy speculation to assume that to some degree that is going to take place, or Ripple will be generating yield on a certain portion of their idle XRP. So
and these projects are focusing on not just DeFi for retail, but it always says institutional security grade DeFi as well. So same thing with Flare Network. You know what I mean? So I wouldn't be surprised either. I mean, we got to still wait it out and see, but I honestly would not be surprised to see these institutions staking side by side right here with us, to be honest with you.
Yeah, and I'm going to show you guys that the landscape is being painted for that exact scenario. So I want to dive into the documented research today. I know that Aqua has something to share that David Schwartz said on a recent panel question discussion there that we had streamed yesterday, where I don't really know who he was talking to. He was talking to a group of like developers from, they all look like they stem from like the Asia region. I'm assuming that that's where they came from. Maybe not, somewhere else. I don't know, but I know that you have that. Do you have that video clip pulled up so that way when it's time you can share it, bro?
Yeah, I got everything. I got all my tabs ready. So
yeah. So anybody that wants the official transcript to what the SEC said, the SEC drops the transcripts whenever they speak. And I just have highlighted here the transcript where he confirmed, he said, I believe deeply in the right to use self-custody and digital wallets to maintain personal crypto assets and participate in on-chain activities like staking. I'm screenshotting that and putting it in my historical data log of just more verbal confirmation that's given me confidence on what we're doing and trying to teach you guys in the Wealth 28 Club that this is happening and you should be learning about it. Then here, a broker-dealer with an alternative trading system should be able to offer trading in non-security crypto assets alongside crypto asset securities, traditional securities, and other services like crypto asset staking and lending without requiring 50 plus state licenses or multiple federal licenses. This is, I mean, wow. Like I just got so much more confident in staking and all the bags that I have that are just generating yield right now. So
Yeah, absolutely. Absolutely.
um,
And let's not sleep on running a node too, becoming a validator, because that
yep.
plays a major role in this whole staking ecosystem as well.
Which yesterday you hosted a private call with the private community on starting how to do that, right? And so moving forward, we're going to continue to host calls, and you're going to show people how they can set up their own freaking node and secure the blockchain system. I mean, it's crazy what's happening right now, bro. So that leads me to this post. I want to really start off with something motivational to really put you guys on the right path, showing you guys that not only are we aligned with regulation and the freaking SEC chair here in the Wealth 28 Club, but now is really the time to start to pay attention. So I said here in this post, be mindful of who you follow online. We live in a world where digital tools are second nature, especially for younger generations. But here's the truth. Many people are digitally fluent, but financially illiterate. They can use tools, but they don't truly understand the money. And yet thousands follow them for financial advice. According to recent data, because we always like to put data and research behind what we're saying, this disconnect leads to a major risk. People making confident sounding recommendations, i.e., 98% of influencers on the internet, but they really don't have any foundation in real financial education. That's why CYPRX takes a different approach. We don't deliver any hype. We don't deliver any recycled opinions. We only provide documented, resource-backed research that empowers real financial literacy. And in this new digital economy, your greatest risk is trusting the wrong voice. So be selective, be informed, and be intentional. Not every influencer is an educator. Most of them are just entertainers. Go ahead, Aqua. Did you have something to say on that before I read it?
No, you're hitting the nail with the hammer. They really are just entertainers. Shout out to them because they definitely have a talent to entertain. But at the end of the day, consuming like 90% of their opinion is really toxic for you, and it can really put your portfolio in danger. But yeah, go ahead, finish.
So this is a research article from IGHSR. And if we come over here, one little tiny portion that I picked apart from this is it says right here, this gap between digital and financial literacy could have a long-term implication, especially if younger consumers do not receive adequate financial education. Despite their comfort with digital tools, they may be at risk of making poor financial decisions. And then it talks about how the world is rapidly becoming more digitally focused, particularly in the banking industry, and how it talks about traditional banking systems are undergoing a major digital transformation to meet the needs of today's tech-savvy customers, and how those individuals that are consuming the wrong information from these influencers that are just entertainers, they're most likely digesting the wrong amount of info, and they're going to get left behind, right? If you're still paying attention to influencers that are telling you guys to sell all of your digital assets for fiat after institutions flood in with trillions of dollars and hope for some pullback and that the market cycle is going to respect 4-year cycles that it previously respected before institutions came in, you're following the wrong people, right? Because we have shown panel discussions from systemically important organizations like the DTCC, like Ripple themselves, like many other organizations with valid credentials in the space saying that era is behind us, right? We're about to see institutional liquidity flood in, especially as legislation and clear regulation is signed into act at a very rapid pace. And you don't want to get caught sidelined, not knowing how to generate passive income with your digital assets, not knowing how to properly accumulate more of these blue chip digital assets at the right market conditions. And again, it sucks to say it, but the vast majority of influencers out there are just entertainers, like Aqua said. So I wanted to start it off with that. To go down this rabbit hole, all right, to show you guys organizations like Stellar, organizations like Ripple are heavily focused on DeFi, yield generation, putting idle digital assets to work. Does anybody remember if you guys were on a previous podcast with us? I believe it was last week. We had discussed and talked about this document right here, all right? And in this document here from Gate Research titled Beyond DeFi Summer, is PayFi Summer on the Horizon? We shared some information, and some of the information in which we shared, it talks about PayFi innovators experimenting here. This is a little screenshot from the document. It says PayFi innovators are experimenting with yield payment models where users don't pay with cash directly, and instead they authorize DeFi generated yields to automatically cover transaction costs. This lowers users' actual out-of-pocket burden and enables new paradigms like streaming payments and yield as payment. And then in this document, we showed that Visa is collaborating with ETH to allow their payment infrastructure to spend liquid staking rewards, right? So to just go and show you guys that, I'll just Command F Visa real fast so we can find that in the document. Right, so it says right here, EtherFi and Visa, a crypto card, is spending with staking yield. EtherFi's focus on Ethereum staking and restaking, its cash card integrated with Visa, and the Visa network implements a yield payment model where users stake ETH, including restaking, to generate yield. Yield is then converted to USDC for card top-ups. Users can then spend directly without selling their assets or converting it to fiat, achieving asset holding, consumption, and yield offset in one. But in this document, it talks about how PayFi participants are leading the charge in this, right? So if we come here to another little snapshot of this document, it says, in traditional payments, users are often merely fee payers. In the PayFi model, stablecoins held by users can earn yield even before being spent, greatly improving capital efficiency and retention. I know that the font is small for you guys watching this as a recording, but that's what it says, right? So in this document that we showed you guys, in the infrastructure model that it has laid out as a visual, Stellar is listed. So let me show you guys that. Here's the document. Then down here, it mentions the transaction layer. And you can see right there, Stellar is mentioned. And this is, again, a document that we share with you guys, if not last week, the week before. So always showing you guys that we're ahead of the curve here in the CYPRX community. And the Wealth 28 Club will now look at what was just recently announced directly from the Stellar Development Foundation 15 hours ago. Interestingly enough, around the same time that Chair Atkins was just speaking. Today, Visa announced an expansion of its stablecoin settlement capabilities, including transaction settlement support over the Stellar network. Stablecoin adoption is accelerating, and both Visa and Stellar are helping shape what the future looks like. Trusted rails, proven interoperability, and a reach that spans market and use cases. And so here's that fundamental update from July 31st, 2025. This is directly from the Visa website, where it says the stablecoin ecosystem is expanding and Visa is at the forefront of its development. As global interest in stablecoins takes center stage, Visa is building on its leadership in the space and enabling support for more stablecoins. More chains are now being supported, including Stellar and Avalanche, in addition to already supported chains like Ethereum and Solana. And in that document that we showed you guys last week, it mentions Stellar as a transaction layer for the PayFi ecosystem, where you're going to be able to use your stablecoins to generate yield and not have to sell your digital assets and then use the yield to make payments directly through your Visa card, which is freaking huge. And now you're seeing Stellar partner with Visa. This is nuts, right? I don't know if you guys are picking up what I'm laying down for you all, but this is crazy proof that what we've been talking about is happening in real time. And so let's head over to this panel discussion, right? Where David Schwartz is sitting on stage next to the Chief Product Officer at the Stellar Development Foundation from the beginning of this year, March 27, 2025. This video still only has 1,200 views. Listen to what the dude from SDF says about your stablecoins and putting them to work for you.
Yeah, I think, the more yield-bearing stablecoins we're going to see, the more competition there's going to be around, how much yield and how distributed to the users. And so I think this place where we're at right now, where there are a bunch of stablecoins and functionally they're doing the exact same thing, I don't think that's going to stay for long. And, people are realizing, I made this equivalent for like a checking account earlier. If you're just holding dollars and not getting yield on them, you're effectively losing money. Right. So if you want to be a participant in the on-chain economy, you want to have a way to park your money in a way that generates yield. Yield-bearing stable coins are the way to do that. And there's going to be a lot of competition with that space.
You know what I caught what he said as well, and what they're referring to it? He said on-chain economy. That's where the economy is going to exist, is on chain. I feel like that is a key little phrase or 2-word sentence that he said there. That is, man, I ain't going to forget that one now. On chain economy is real. Damn.
You know, and I mean, on top of that, brother, you got all these people that hold the digital asset XLM and they believe in XLM and this and that, but they won't directly listen to the people that work at the Stellar Development Foundation who flat out just told you that if you're not earning yield on your money, you're effectively losing money, which is 110% true. So again, you have all these people out there that are just fixating your attention on price appreciation instead of active portfolio management and yield generation, cash flow in your portfolio in the now. So that way you're not just sitting idle and doing nothing and just waiting, right? You're actually making money. You're actually building a rising equity curve and seeing appreciation in your portfolio, no matter what market cycle we're in, whether it's a bear cycle, a temporary pullback, a bullish environment. Your assets should be working for you around the clock. And in this DeFi 24/7, fully interoperable, integrated on-chain economy that we're headed into, that is 110% possible. And the people whose opinions matter, like the people who work at these organizations where you're buying these digital assets, they're the ones telling you guys this, right?
Yeah.
I wanted to pop this up because you showed me that video breakdown of that panel discussion that we shared yesterday. David Schwartz mentioning that he wishes that they built the XRPL on Rust, if I'm not mistaken.
Yeah, let me share it because I took the clip and I posted it on my X so that I didn't have to go and find the actual clip in that. It's like an hour-long video. So I just posted it. I could share that, and then I will show you guys something, you know, that's pretty dope. So I feel like him saying this, hold on, let me share my screen. I feel like him saying this was like a nod to XPR Network and to Sorrowban, because Sorrowban is built on Rust as well. So hold on, let me just share my screen so you guys can see what I'm talking about.
And so for those individuals that don't know what Sorrowban is, could you briefly talk about that just in a nutshell?
Sorrowban is basically what gives the ability for smart contracts on the Stellar Lumens chain. They didn't have smart contracts until Sorrowban came. So, all right. So hold on. Where's play at?
Is it the explanation for the choice of C++ as a code?
You can hear that correctly, right?
Yeah, bro.
Okay, cool.
Language?
Well, I'm a C++ programmer. You know, that's so. I mean, if I'm the first programmer that you hire, you're going to get a C++. If it's a programming job, you're going to get a C++ result. I think also a driving factor was the Bitcoin was written in C++. I think if we had it to do over today, we probably would have chosen Rust, just because of the memory safety. But like, you know, there are a lot of advantages to C++. One is that the compiler technology is very mature. The tool chain is very mature. Platform support is spectacular. And I think today, though, Rust would probably be, if not, you know, probably just as good. And the advantage of memory safety is not. There's a lot. You'd be surprised how many. Well, probably you wouldn't be, but like a lot of bugs and issues with C++ code circulate around. You know, come from its memory safety issues. So Rust has an edge there.
So Rust has an edge there. He just told you all the perks of Rust. I'm not a programmer, keep in mind, so I don't know like the super ins and outs of programming this stuff. All I know is that what he just said is that if he had the chance to rebuild, he would have used Rust. Now, just, you know, going into my elephant memory, I'm like, yo, XPR Network is built on Rust because, can you see my next screen here?
No, let me remove your current screen and then add it again to the stage.
Let's see here. Hold on.
So low key, in a nutshell, I mean, he's kind of confirming the infrastructure that Sorrowban and XPR was built out on.
So it says it right here. It says, welcome to the XPR Network mainnet validator node installation. XPR Network is a protocol built on top of Antelope EOSIO, a consensus layer, right? And then to come over and take a look at Antelope, it's basically the framework of it. Hold on, let me stop and reshare again because I know it doesn't follow my. Hold on, I got to get that fixed. I'm gonna work on that actually today after the live, so I can get the tab over tab fix. I keep forgetting about that. So check this out. So basically, I just showed you how it's built on Antelope EOSIO, and it says right here, basically, Antelope is a blockchain framework increasingly embracing Rust for development, right? And then when you go and look at the language of Metal blockchain, right? Let me take it over to the next tab. Hold on one second.
I love the comments. There's such great comments. XRP farming is absolutely amazing. I agree, as long as you're willing to take the risk, right? There was another comment up there where was it? Where was it? Let me find it. Banks are also going to want to cust all the assets, but where was it at? Dang, you guys went crazy in the comments. Go ahead.
Yeah, so right here, you see it right here, right? So this is the Metal blockchain. And keep in mind, I keep saying this, that XPR network is built into Metal blockchain. It's the primary subnet. So Metal blockchain and XPR basically run on Rust, right? And it says here the language is Rust. So hearing David Schwartz say that, I felt like that was just like a nod and a salute to XPR network and XLM for how they built. Because, I mean, I'm not a programmer, but just hearing it from David Schwartz, I feel like we're hearing it from the horse's mouth. And then to see these guys being built on Rust, I feel like it's pretty loud and clear. You know what I mean?
Yeah, and here's the documentation directly from Stellar, where they give an introduction to Soraban, where it says, "We're excited to introduce to you Soraban, a powerful smart contract platform designed to be sensible, built to scale, and developer-friendly. With a focus on Rust performance and safety benefits. With its user-friendly interface and powerful features, Soraban offers an ideal platform for devs who are seeking a more efficient and effective way to build decentralized applications and transition from Solidity to Rust." Down here, it talks about Rust performance and safety. Rust is a systems programming language that emphasizes safety, concurrency, and performances. And David Schwartz, sitting next to that dude from Stellar, talking about stablecoins and yield generation. I mean, piece it all together, right? You guys can see who the major market participants are going to be just by picking up on key vocabulary and what they're saying. So super, super freaking bullish here at the end of the day. Long-term, understanding that this is a transformation that is going to take time. It's not something that's just going to happen overnight with a snap of a finger, but it is happening, and it's happening aggressively fast, if you ask me. To cap on something that you said, go ahead, Aqua. What were you going to say?
No. I just want to say it's happening super fast. And at some point, I just want to share the compilation video that you collaborated with me on and we made, because those people, like, you're saying it's happening super fast. That may sound like your opinion, but like when we show that compilation video, it's like, no, we're aligning our opinion with really smart individuals that are saying the same thing, that you're running out of time. The window of opportunity is going away. This is happening much sooner than you guys think. And yeah, those, again, are not random people on the internet. These are people with amazing resumes that I can't compete with my resume. You know what I mean?
I'm going to pull your X profile up and share that so that way that's the sound is nice and crisp, because that video is clutch, bro. I wanted to go back to something that you said, how this, this infrastructure is being built in such a way for both institution and retail participants to, actively participate in yield strategies. Well, we got this organization that just posted this fundamental piece from July 31st, 2025, Brava. If you guys have never heard of them, who they are, right? Brava Labs is a software development company behind products such as Brava Stablecoin Management System. Brava simplifies yield optimization by offering high yield opportunities, exclusive DeFi risk protection. That's nice, right? Because they offer insurance, Brava does, on DeFi positions, which a lot of people don't think exists. But if you actually do the research, to some extent, you can actually insure your DeFi positions. And tailored strategies based on individual risk preferences, designed for both institutions and individual users across DeFi and non-DeFi audiences. Brava prioritizes security, simplicity, and profitability. And they just released this article here where it says, for institutions holding stablecoins, and this just aligns directly with exactly what the Stellar Development Foundation rep said. For institutions holding stablecoins, the goal is no longer just safety, but productivity. Leaving capital idle in a wallet or a centralized exchange might feel secure, but it introduces hidden risk, inflation erosion, custody exposure, and missed yield. On the other hand, chasing high returns without proper controls invites only volatility and loss. The real challenge is deploying capital in ways that are secure, transparent, and consistently income generating. I'm pretty sure I said that the other day in a freaking post, that the goal is consistency. As a matter of fact, I'm gonna have to pull that up because I know word for word I said that. You remember we talked about that yesterday on the Zoom call?
Yeah,
bro?
yeah. Bring it up. You did. And then just real quick, somebody in the comments is asking if metal is a layer 1. No, metal is a layer 0, and it's actually not connected to Stellar. We were just showing that Stellar and Metal Blockchain and XPR Network are all using Rust, but they are all separate. So whoever's in the comments, like, don't think that they're connected and Metal sits on Stellar or anything like that. They're completely separate chains.
Let me see if I can find that one piece, because I know I said something. Oh, here it is right here. Yeah. Strategies. Everyone doesn't have the ability to build. This is it with the conditions constant. Okay, yeah, right here. I said, because I was replying to somebody, because I talked about here in this long post, right? In this post, I said, in the future, there will be two types of XRP investors. One, those who hold XRP, leveraging it through advanced DeFi strategies like lending, borrowing, and liquid staking to generate passive income. These individuals will understand the long-term vision, preserving their XRP as a generational asset, building wealth that stays in the family bloodline. And number two, those who are manipulated by influencers to sell their XRP for fiat, which is a depreciating, inflation-prone currency eroded by central bank manipulation. They'll cash out too early, hoping and praying to time the market for a better re-entry, which 99% of retail traders can't and don't know how to do properly, only to watch as institutional capital floods in and drive prices out of reach, leaving them stuck back in traditional finance with bags of fiat. So let's entertain the counter arguments. Well, what if XRP reaches mass adoption or never reaches mass adoption? That's a fair concern. Regulatory risks, delays in utility-driven demand, or competing technologies could all stall XRP's growth. But many said the same thing about XRP back in 2020, and look at where we're at now. Number two, is DeFi really safe for passive income? Not at all. Not all DeFi is created equal. Looping strategies involve risk, like smart contract exploits, liquidation events, and protocol failures can all eat into your capital. That's why education, risk management, and diversification are absolutely critical, which is exactly why in the Wealth 28 Club, we stress the importance of diversification inside your DeFi portfolio and inside, even more so, an XRP portfolio, where you allocate some XRP to DeFi, some XRP for institutional or cold storage that you never touch, and some XRP that you can sell for stablecoins to then go and lend out for yield and then borrow against to buy yourself something nice in the future. And then there was another rebuttal here that I wrote about. Isn't it wise to take profits in fiat and secure gains? Where I said, yes, realizing gains at strategic points is smart, but exiting entirely because you think you will get the opportunity to re-enter at a discount, especially after institutional adoption hits full steam, which I'm going to show you guys in today's video breakdown that it is 110%, is 100% speculative and not guaranteed. The market does not owe you a discount, and to think that the market will act the same as it did in previous cycles once institutional money floods in is an illogical way to think. Also, timing the market is notoriously difficult, and 99% of retail traders do not have the proper market analytical skills to re-enter properly and will likely screw that strategy up horribly. The takeaway, the future will favor those who not only hold high conviction blue chip assets like XRP, but those who know, excuse me, how to take them and work through intelligent financial yield strategies, because fiat is losing its edge. And I just reposted this Cozy D post here where they said life post yield on XRP is going to be so nice. And then we had somebody in the comments, you know, that's always like doing the whole like I'm scared scenario and mindset. And they said you will either take substantial smart contract and lending risk, risking a large part of the bag to generate enough yield, or you need a massive bag to only use partial for your DeFi. And I said here that I already covered that by diversifying. But in my response back to them, which just goes hand in hand with this organization here, Brava, that provides solutions for both institutions and retail traders, where they're talking about consistency is key. I said here in this post in my reply back to this individual, well, my brother, if you are starting off with a small bag, you can't set yourself unrealistic goals because not everybody is managing a large amount of capital. And I talked about this yesterday in our private Zoom call. That does not mean that you should be discouraged to sit sidelined and not participate because you're not making a lot of money. That's so stupid to think that way, right? The name of the game in DeFi is not always about how much money you can make. It's about how consistently you can make it during all types of market conditions. while compounding gains and seeing a rising equity curve expand over time. Mastering DeFi is a skill, not a get-rich-quick schematic. Mastering DeFi strategies with small amounts of money should not be discouraged. Why? Because it is practice to build a craft in your skill to make similar percentages consistently when your capital does finally expand. Not everyone has the capital, but everyone does have the ability to master a skill, and those skills mastered over a period of time can build capital. That is such a powerful statement, I feel like, and reply back to the skeptical individual, right? I don't know if you had anything to say on that, Aqua. You were nodding your head.
Yeah, no, I mean, just having the conviction that we do in these digital assets, if you stake $1,000, for example, earning 10%, that's $100. Some might think, oh, that's not enough. But in my opinion, and where my mind is at, is I would rather take that 10% and compound it into my bags, because I have long-term conviction. So right now the price might be, in the cents or a couple of dollars, but once institutional money pours in, if this is a winner, I'm super happy and stoked that I was earning that 10%. And yeah, at the time it was small and it wasn't anything. And I'm not trying to live off of that per se, but I'm building for my future. So then in the future, I'm like, yo, I am so happy I took advantage of that 10%, because I would have only had 1,000 of these tokens. But because I took, advantage of the 10%, the last 4 years, now I have 1,400 of these tokens, and now it's worth $1,000 or $10,000. So, it's like, imagine Bitcoin back in the days and, being a penny or whatever, and just having a Bitcoin trickle in every single day. It might have been 2 pennies, 3 pennies, 4 pennies back, over a decade ago, however long ago, back in 2009. But fast forward, look at where Bitcoin is today. So, yeah.
I'm telling you, man, it's the people that think small, that they're not necessarily think small, but their concentrated mindset and way of thinking now is to set themselves up for success in 2 years, 3 years, 5 years, 10 years down the road, are the ones that are going to be successful, not the ones that are thinking, oh, I'm going to sit sidelined, I don't have enough money to participate. Because I get it, not everybody has a lot of money to enter into this space. That should not discourage you to participate and learn. You don't need money to read a document. You don't need money to watch a panel discussion or to subscribe to the CYPRX YouTube or to Aqua's YouTube, where we literally pump out hundreds of valued information. That's all free. You don't need capital. You don't need capital to do that. So don't be discouraged because you don't have money. To go back to this post from Bravo, which again provides, yield opportunities for both institutions and retail. Look at what they said here. They said the real challenge is deploying capital in ways that are secure, transparent, and consistently income generating. I like, bro, it's word for word what I said in that post.
Yeah, it is. For sure.
And it says that means treating stablecoins not as static reserves, but as active components of a well-managed treasury. To do this effectively, professional teams need a clear strategy for yield allocation, a system to manage that capital efficiently, and controls that limit exposure without compromising on returns. And that is exactly what we discuss and talk about on a daily and weekly basis in the CYPRX Wealth 28 Club community. I mean, yesterday, was it on Wednesday, one of our DeFi members that was on a call with Kev during his DeFi call came out and was like, yo, shout out to Kev, booking a private community call with him, like really opened my eyes, and it's 110% worth the money. Like the fact that he came out in front of everybody, there was like 53 people on that Zoom call and said that to everybody, is just powerful.
Yeah.
So
it's
in the right
definitely
headspace. Yeah. To continue down the rabbit hole, to show you guys that institutions are taking charge of this at a very rapid pace, because myself and Aqua have been screaming DeFi at the top of our lungs for over a year now to everybody, and people still can't comprehend that this is regulated. Like, it is 110% regulated, y'all. Now, it might not be regulated in all jurisdictions, and there still might be cracks in the regulatory, alignment that is currently in place, but in certain jurisdictions and through certain regulatory alignments, it is regulated, and these institutions are participating. So check this out. Let me back what I'm saying. This is from July 30th, 2025. So 2 days ago. Jelly C, OKX, and Franklin Templeton are set to create institutional investment opportunities leveraging Standard Charter's custodianship. Jelly C, a leading digital asset investment manager today, announced, this is again back 2 days ago, announced a strategic relationship to join a recently launched tripartite collateral program with OKX, a leading cryptocurrency exchange and on-chain tech company, and Standard Chartered, a leading bank group. Jelly C has selected Franklin Templeton's tokenized money market fund as its preferred trading collateral. The collaboration allows Jelly C to utilize cryptocurrencies and Franklin Templeton's tokenized money market fund as off-exchange collateral for trading on OKX while using Standard Chartered, which is a globally systemically important bank, a GSIB, as the custodian for their collateral. This initiative significantly enhances security and capital efficiency for Jelly C while maintaining the highest standard of security. So I was like, what the heck is Jelly C and what are they offering to their clients through this collaboration? Well, look at this. It says, Jelly C offers a range of funds for its investors, including Blue Bottle Market Neutral Funds, which is an investment fund that generates income by investing in a mix of market neutral blockchain strategies and tokenized deposits, money market funds, bills, and bonds. Then I was like, okay, let's dig a little bit deeper. Blue Bottle Digital Infrastructure Fund, an Australian unit trust offering wholesale investors access to premium blockchain networks whilst generating a compound yield from staking. This is huge. So I was like, hold up. You got this organization that's in collaboration with Franklin Templeton and a globally systemic bank. They got to be adhering to some type of regulation to offer staking solutions to their clients. So I went over to their website, and sure enough, it is regulated. They're offering regulated services, staking services to their clients. So for anybody to say that DeFi is not regulated, they're not keeping up with updated announcements. Check this out. So here is Jelly C. This is their website, Blue Bottle Multi-Strategy Fund. This is what they were talking about in this announcement from just the other day, July 30th, right? And if we come over here and we read about it, it says the Blue Bottle Multi-Strategy Fund gives investors exposure to a diversified array of digital assets with a focus on long-term investments. The fund invests in early stage projects as well as active strategies like staking, validation basis, and arbitrage. Then if we come right down here, it says the fund strategy. The Blue Bottle Multi-Strategy Fund gives investors exposure to a diversified array of digital assets and strategies with a focus on long-term investment. The fund is regulated by ASIC, right there in purple. That says it right there in front of your face. Managed by an experienced team of deploying active portfolio management and supported by a strong risk management framework. And right here in the fund, it mentions staking and validation. Then it gives the portfolio compensation, ETH, Bitcoin, and DeFi protocols right here. Go ahead, bro.
Yo, that's this. If this ain't proof on the wall right here, DeFi 7. This is their portfolio. 7.7% is going into DeFi. Yo, say less.
And it's regulated, bro. It's regulated. They're staking in a regulated fashion right now in Australia.
Man, yeah, this is. Yeah, we've been telling y'all, and this is what's going to end up coming here in the States once we get the rules and regulations. So it's right around the corner. It's right around the corner.
We just got the verbal confirmation 15 hours ago from the SEC chair. Like, how are people sleeping on this, bro? This is crazy. Yeah. The Wealth 28 Club, I hope that you guys are starting to realize, is ahead of like most people that are like teaching about DeFi. This is crazy.
Yeah. Yeah, even with market sentiment, what's coming down the line, Cypress's technical analysis, that honestly, I haven't seen anybody outside of our community that has a, technical analysis like you, bro. I mean, I'm not trying to talk shit about other people, but the level of accuracy that we have within our community is way above par. So
it's unmatched, bro. It's unmatched. And again, more people will slowly but surely catch on, and they'll wake up and realize, dang, I'm tired of all the hype. I'm tired of all the misalignment and all the outrageous price predictions that never come into fruition and blah, 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 blah. And they'll finally wake up and they'll realize I need to chap into a community that really knows what the heck they're talking about. And we'll be here waiting for them, bro. We'll be here waiting for them. I want to show you guys that Ripple is aligned with this movement as well, right? So first off, here's a document that was put out in 2025 directly from Ripple themselves, Ripple CB Insights and the UK Center for Blockchain Tech, titled Banking on Digital Assets and How Traditional Finance is Investing in Blockchain. Keep in mind. And this is from 2025. So if we scroll right down here to page 6, they talk about all the institutions that they interviewed for this. And right down here, it says, of the 33 mega round deals, the use cases that garnered high levels of interest included institutional infrastructure related to trading, staking, and tokenization. And here you can see the banks and financial institutions that were discussed and talked about in this 33 mega round deal. SBI, financial institutions from Japan. It says Goldman Sachs, right? So this is more crazy proof that financial institutions are interested. It says right here, interested in staking and tokenization. And this is coming directly from Ripple. Not only that, but mind you, we had this post directly from Ripple themselves 2 days ago where they posted the Apex 2025 event that took place, where Hugo Filion on stage is directly talking about liquid staking your XRP. So take a second here and listen to this like 2-minute long clip.
So Firelight, the staking protocol that is being built on Flare, enables varying degrees of interaction for different parties. So for both individuals and institutions, staking of XRP is available in terms of being able to put your XRP to work in infrastructure. And we'll come on to use cases around that in a moment. But Firelight will also enable institutions to put their XRP to work in quite sophisticated financial products. And that's a kind of separate but interesting and related area.
Flare, in my personal opinion, is an absolute sleeper. People aren't patient, and so they don't really understand that real evolutions and real good technology takes time to build out, battle test, and that is exactly what Flare has been doing. They've been taking their time, and people don't like that in this space because they've been so, commit to instant gratification.
Facts.
But they're building out something so powerful for the XRP community. I'd be so surprised if they don't benefit substantially for it. And people don't really understand how massive this is. For example, let me take you over to a document. So you guys just heard directly from Hugo Filion mention that they're building out liquid staking capabilities for XRP holders for both retail and institutions. Screw retail for a second, okay? Because these institutional whales, and when I say institution, I'm talking right now, you have crypto native hedge funds, private family offices, wealth management firms that are willing to take the risk in crypto. Those are the whales. I'm talking $25 million plus in their portfolio. They exist 100%. Go look at the market cap for XRP, right? And most of the liquidity that they have in XRP is sitting dormant on centralized exchanges, okay? Sitting idle, doing nothing. Now, if we go over to this document from Ripple, where they said these institutions are 110% interested in staking, it says it right here from a Ripple document. And then we come over here to this document from, let's go up here. This is from July 20th, 2025. And if we come down here, who is this document from? Just to show it's from people with valid credentials. It's from the Department of Industrial Engineering and Operations Research from the Columbia University. And so if we come up here to page 2, what do they talk about? They talk about the substantial expansion and the reason why Ethereum is the price that it is, right? They mention and talk about the expansion in the DeFi ecosystem, and specifically they mention liquid staking. So if you don't know what liquid staking is, liquid staking enables staking and yield generation through the ability to liquid stake tokens or liquid stake your ETH, for example, or in this case, we're talking about XRP. So it says here, right up here, a prominent example is the rise of liquid staking protocols that allow users to stake their ETH. In this case, we're thinking in terms of XRP because now that's becoming unlocked, and receive a derivative token, which are usually referred to as liquid staking tokens that remain liquid and usable in other applications in the DeFi ecosystem. And that is all coming for XRP. And look at what happened to ETH when they released liquid staking features. It says right here, liquid staking effectively addresses the illiquidity of traditional staking, and its adoption has been extraordinary. For example, Lido staking Ethereum, or STETH, the largest LST or liquid stake token on ETH, grew from about $20 million in market value in January 2021 to over fucking $15 billion by mid-2023, y'all. Do you understand what is about to happen to XRP's price when all of this is solidified and signed into legislation? ETH went from $20 million in TVL and liquid staking to $15 billion. That is over a freaking 30% increase. That is huge. If you go look, go ahead.
And that's without institutional money too.
It's so wild right now that the XRP community is ignoring this because they think it's a scam, when they don't understand that this is what's about to take XRP price to all of those bullish Moonboy targets that have existed for the past 5 years. It's not going to be cross-border payments and remittances yet.
No.
It's going to be
TVL. TVL. Yep.
It's going to be DeFi, bro. And Ripple just posted this. Think about it. Ripple just posted this from Hugo Filion, where what are they talking about? This is directly from the Ripple Ripple YouTube. They're talking about liquid staking for XRP. And if you look at DeFi Llama right now, so just to show you guys, imagine if, okay, we don't need, people don't understand that right now, we don't need the market cap of XRP to increase at all. We don't need that. If we just had the current market cap of XRP, and instead of it all sitting centralized, dormant on centralized exchanges, we just saw $15 billion in the DeFi ecosystem. Oh my gosh. I don't even know what the heck would happen to the price. It'd be insane.
It would do numbers. We'll just say that it would do numbers.
$80 million right now is what's locked in the TVL and the DeFi ecosystem on the XRPL. So let's just say, hypothetically speaking, XRP mirrors what happened to Ethereum in terms of liquid staking. You can see when liquid staking was launched in Ethereum, the TVL went from $20 million to over 15 billion in just 2 years. If that happened on XRP, which I'm going to go outright and say that it will over the next 2 to 5 years, we will see this TVL in the DeFi ecosystem on the XRPL increase substantially. Even if it just went from 80 million to $1 billion, y'all.
I mean, think about it too, with the tokenized real estate that's coming. They already got it regulated and it's compliant in Dubai. You've shared it before, Pripco, they're tokenizing real estate in Dubai right now. Once all that liquidity from the equity or from the value of those those houses and real estate is on chain, that number will start counting towards this XRPL total value locked in DeFi. And what we're saying is that it has nothing to do with market cap. When you hear market cap people talking market cap this, market cap that, that has nothing to do with it. It's total value locked in DeFi. And what Cypress is showing you guys is a clear-cut example that we're not capping.
I'm telling you, and at the end of the day, it's all about trading volume and active activity, right? And when that increases, it's going to increase the demand for XRP. And a lot of people in the XRP army, for some odd reason, because they've been manipulated to believe that market cap matters, which it does to some extent. I'm not saying it doesn't, but when they ignore DeFi, think about it like this. How many times over the past year have you been saying or hearing the XRP army say, oh, XRP is going to replace Ethereum in the number 2 spot? Why hasn't it? Have you ever asked that question? Why has it not replaced Ethereum in the number 2 spot? It is solely because of Ethereum's DeFi. Like, it's the DeFi activity. Go look at Ethereum right now, $80 freaking billion locked in ETH DeFi. So when this happens on XRP, then maybe we can consider XRP replacing ETH in the number 2 spot.
Hey, yo, show them Solana. Show them Solana. Why Solana is the price that it is. Why is Solana so much more expensive than XRP? Doesn't make sense to me. That's why.
9 billion in TVL locked in DeFi, active right now, creating constant demand for Solana.
On all those meme coins over there and all those.
So let's just go outright and say, because if you go over to the total market cap of XRP, what is it in at? 192, 197 billion right now. Let's go look at CoinGecko. What is it right now? 178, right? So $178 billion total market cap for XRP. Let's just say 8 billion of that is unlocked into the DeFi TVL in active trading, liquidity provision, liquid staking, vaulting. Wow. Substantial price appreciation without the market cap going above where it's at right now. Just dormant XRP unlocking from centralized exchanges and moving over into the active DeFi participation. That is what is about to create substantial demand for XRP between now and 2030. And if you look at the focus of Ripple, Ripple has said themselves that they have shifted their focus from cross-border remittances and payments to DeFi, real world asset tokenization, fractionalized ownership, AMMs, liquidity provision. Can't make this stuff up, y'all. So don't ignore DeFi. Even if you're not going to participate in the DeFi ecosystem because you're skeptical on it, you need more regulation, you're still worried about what happened back in 2022 in the DeFi ecosystem. I get it. We talk about that in the Wealth 28 Club. But remember, you don't have to risk your XRP to learn about DeFi, to read a protocol white paper, to jump on a Twitter space where, for example, Centaura and Firelight and Flare, Hugo Filion, hosted a Twitter space last week. Myself, Aqua, and some of the other DeFi mentors in the Wealth 28 Club, we were on that call, and there was only like 300 people listening into that live discussion. I'm like, yo, everybody in the XRP community should be on this call right now. Why aren't they? And it's because they don't know about it.
Yeah. And little do they know that Hugo Filion has their best interest to bring the price of XRP up. Once he completes F assets and everything is there and available for us to stake. I mean, you even got people like Uphold saying that they're going to use the Flare network to give XRP holders the ability to stake their XRP on Uphold. That's not something I would recommend, but to each their own. But little do you guys know that Hugo Filion has our best interests. Hugo Filion is who's going to help bring the price of XRP up with bringing liquidity to the total value locked on the XRPL through the Flare network. So, I mean, do you remember going back when we first started, even a little bit before we started Wealth 28 Club, and we shared that the podcast with Hugo Filion, and what did he say? What's your guys' main focus for the next 2 years? And his exact words were DeFi, 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 and then fast forward now and look at how far we've come and where we're at. Yo, yeah, he was not lying, man.
The next 2 to 3 years are going to be absolutely incredible for XRP holders that actually learn how to put their liquidity to work, because over the next 2 to 3 years, the people that understand how massive and how important DeFi is, they're going to learn about DeFi. So that way, when XRP does go to $100, when it does go to $500, when it does go to $1,000 in the future, you're not going to have to sell your XRP. And like I said, there's going to be two types of people. There are going to be people that learn how to put their XRP to work and keep it in their family bloodline and pay themselves with passive income. If you want fiat, I get it. We need fiat to survive, to pay our bills, to pay for goods, to buy houses, to buy Lambos, whatever. We need fiat. I get it, right? Well, we're entering into an era where we can do that with crypto, but that's besides the point. You don't have to sell your XRP if you want fiat. And if you understand that, that's all you need. That's all you need. Once you understand that, you can build strategies off of that by educating yourself. And the best rebuttal to anybody, so I'll say this right here, because this was a post that I made in reply back to a Bitcoin maxi. As a matter of fact, they even have Bitcoin maxi in their bio. This is Fred Krueger. I don't know who the heck this dude is. He's got like 300,000 followers, but it says right here, he's an investor and he's a Bitcoin maxi with a Stanford PhD. Dude's an idiot in my personal opinion, because he doesn't understand activity or DeFi TVL. And he said here, and you guys know I don't talk shit about people, but this dude and people like this are actual idiots. Like, they're actual people that don't understand the crypto ecosystem, right? And if you find somebody that's giving their opinion that actually doesn't understand the crypto ecosystem, just block and ignore them. So I replied back to this because he said here, not one actual human being is using XRP, not one. This is literally the farthest thing from the truth. And I physically proved that people, institutions, the likes are actually using XRP. So let's read my rebuttal to this. No one actual human is using XRP. This is factually incorrect. So let's use education to back my claim. As of today, the XRP ledger has $84.79 million in total value locked across DeFi protocols. That number did not generate itself. It reflects from real users actively participating in real financial activity on chain. DeFi TVL is not speculative hype. It's hard data. It represents capital deposited into AMMs, liquidity pools, lending markets, and other smart contract protocols on the XRPL, especially now with the EVM sidechain. This will only continue to grow. That means that individuals are locking their XRP in Vault for yield. Liquidity providers are earning yield and automated market makers. Developers are building products that require user participation. This is not about maxis, it's about facts. And the facts are on chain. Fred said not one actual human being is using XRP. So here's the reality. $84.7 million is currently locked in XRP DeFi. That's real money from real users using real protocols. DeFi TVL does not exist without participation on chain with XRP. So people, real people, are providing liquidity with their XRP. They are trading with their XRP, and they are earning yield on the XRP ledger every single day. So to say no one is using it just shows a complete lack of understanding of how on-chain data works. So in short, yes, people are using XRP. The XRPL DeFi TVL reflects direct XRP usage without XRP being deposited, paired in liquidity pools, swapped, or used for fees. That $84 million in TVL would not exist. So the chain does not lie. However, we live in an era where people with thousands of followers unfortunately do. I rest my case. And you saw me not mention cross-border remittances or banks or none of that shit, not one time in this reply. It was all proof through DeFi.
He didn't. He crickets. We didn't get no response, I would imagine.
Crickets, bro, because this proves the case, and it's interesting to say the least that people. I mean, how many followers does this dude have? 172 followers. Freaking outdated dinosaur, man.
Yeah, super dinosaur, Mr. Stanford PhD. I to be honest with you, bro, I don't give a shit about no PhD, none of that shit, bro. Like, I really don't. Like, if you don't know how to use your logical mind, bro, get out of here.
If you don't know how to look at transparent data on a public blockchain, why are you even in crypto? I don't know. Makes no sense to me.
That makes no sense to me. That's wild.
For clicks and views, clicks and views. My last spiel for the day to show you guys that institutions from valid research organizations are telling you all, hey, institutions are focusing on DeFi. Check this out. This is a July 2025 document. Shout out to the researchers for this. BCW research titled Institutional Digital Asset Staking Report, right? This one's juicy, man. This one's really juicy. So on page 3, we're going to start there. And it says, across the world, from bulge bracket banks to asset managers to asset issuers to payment providers, the arrival of large-scale institutions and their customer bases into crypto is happening in real time, right? So there's just some really great confirmation. Then if we come down here to page 4, it goes on to talk about how these institutions are not just testing out the technology like in previous market cycles. Rather, they are building with it, deploying capital, and onboarding their large customer basis. Institutional capital is finally here. Now that the industry has gotten to this point, the big question to answer in crypto is, where do institutions go next? There are various entry paths, and every institution's journey will be different. But if we were to generalize a common pattern, we see progression in the similar fashion below. So here it goes on to talk about how these institutions are going to come into the space. And if we pay attention to 2 areas of interest, number 7 and number 8, it says they believe that these institutions are going to use increased yield on assets via different forms of staking. And then it also mentions beyond staking and increased yield methods, they are also going to provide lending, pools, and vaults, right? Then if we scroll down here to page 11, last but not least, it says, Ethereum staking has become critical infrastructure underpinning the digital asset economy. With over a quarter of all ETH now staked, institutions increasingly look to liquid stake tokens like STETH, which I already showed you guys had a substantial increase from 2021 from 20 million to 15 billion to 2023. That is huge. Again, that is critical infrastructure for Ethereum. To enhance liquidity and capital efficiency as ETFs and institutional products move closer to regulatory clarity in the US, protocols offering deep liquidity and widespread integration will help define the next wave of ETH adoption. Again, replace ETH for XRP in this scenario. And it says, each of these 3 staking methods presents a varying opportunity for institutions to contribute further to blockchain ecosystems while enhancing yield on existing crypto assets. Long-term institutional capital will flow into other yield-generating activities, especially DeFi primitives like lending and vaults. Though participation here still requires a bit more regulatory clarity, institutional capital is headed in this direction. So when we're telling you guys in the Wealth 28 Club, hey, pay attention, institutions are coming, we're showing you all panel discussions of Paul Atkins, the SEC chair, verbally confirming today, 15 hours ago, that he believes we should have access to staking activities and lending and borrowing. It says it right here. Here's the transcript from his meeting today. I don't know what other confirmation to show you guys, so I feel like I rest my case today. You're muted,
I think right now is the perfect time to now bring in that compilation video, because this is the cherry on top. Because we mentioned Franklin Templeton, and today we talked about the DTCC today. So let's bring up the actual people that work at these places and are the head honchos, and let's hear what they're saying is going to happen in the next 12 to 24 months.
Heck yeah. I want to bring up, here it is right here, because this is exactly, I replied back to your post, by the way. I don't know if you saw that, but I wrote this response back to the video that you made. So before we play this reel that Mr. Aqua compiled together for you guys, which, by the way, for the record, all of these videos that Aqua compiled together for you all are all from 2025. Keep in mind. Okay. So they're all updated. We have 2,200 people on the call. We really do appreciate you guys for tapping in with us this Friday. As always, keeping these Friday Wealth 28 Club podcast lives going for you guys. If you all find it of interest, tap in with us in the private CYPRX community. You guys want access to any of this research when it drops, hundreds of documents, hundreds of panel discussions that never reach the mainstream. I mean, we just showed you guys a panel discussion of the SEC chair that only has 44 views. Right. And I'd say that probably half of those views came directly from the CYPRX community. You want access to that type of information on a daily basis. You want access to Zoom calls, fundamental updates. You want access to good, realistic TA and price analytics from an institutional standpoint, an investor in this space that has over 13 years of hedge fund experience. Tap in with us in the private CYPRX Discord. If you guys want access to a whole slew of our DeFi University, showing you guys how we're exposing our hard-earned digital assets to this DeFi ecosystem, testing out protocols, generating yield with our digital assets, participating in looping strategies, learning new things about this space, going over new protocols that we're coming across to keep on our radar, doing video Zoom calls live throughout the entirety of the week. Head over to cyprxtrading.com and tap into our Wealth 28 Club. I will leave it here with you guys today. Do us a favor, if you're watching this as a recording, smash that thumbs up button and subscribe. Tap in with us next week. Upcoming in August, we have some very interesting guests. We'll announce them shortly in the coming weeks, but they're going to be guests surrounding the XRPL ecosystem, lending and borrowing, and so on and so forth, that are building out protocols right now where we're going to be able to put our XRP to work. We'll be having those as guests moving forward. So my rebuttal, or excuse me, not my rebuttal, my reply back to Mr. Aqua's post here. I said, most people underestimate the power of gradual change and how massive this momentum is going to become. They don't realize that the next few months will accelerate this transformation in ways that they can't even begin to fathom. Here's the reality. The ones who succeed are the ones who understand that wealth does not build from massive one-time jumps. It's the daily habits, the small improvements, and the smart moves that eventually lead to massive growth. But right now, there is a huge gap in knowledge, and that's why so many people are missing out. If you're still watching influencers that are giving out outrageous price predictions that never come into fruition or materialize when they call them out, ignore them, block them, and focus and lock in. So why now? Why is this moment so different? We are entering into a period of acceleration. If you've been paying attention, you've already seen the signs of tech innovation. Financial systems are evolving and new opportunities are coming in every corner. The rate at which these things will start accelerating over the next few months will be faster than anything that we've ever seen in years before. Those who get it now will be well positioned to benefit. It's not about luck, it's about knowledge, preparation, and the willingness to take action before the curve becomes too steep for most to catch up, which I can almost guarantee at some point in time in the near future, it will. The window is closing, and if you don't lock in within the next 12 to 18 months, you risk watching others take advantage. You risk watching others take the advantage that you had. We're at the beginning of a massive shift, one that will shape the financial future for decades to come. The question is will you be a part of this wave or will you watch from the sidelines? So listen to this compilation that Aqua pieced together for you guys.
It feels like the floodgates are going to open, doesn't it? It feels like the floodgates are going to open this year, doesn't it? all coming together. So we've talked for a long while about institutional decentralized finance. Many of us here talk about institutions coming into the world of blockchain and DeFi. And this is going to blast that into a new milestone, kind of a new strategy.
But I do think the concept of tokenized stocks and ETFs and on-chain investing, like on-chain brokerage, truly, and custom advisory is going to take off significantly faster than what people think and will probably happen in the next 12 months.
We're building for banks, we're building for credit unions. So I think it will take, every time I look at it, I say, we're only a few years away, something happens, and then you cut that into like a quarter or a half, because it really is kind of like Moore's Law, where it just keeps exponentially speeding up in terms of the innovation. I used to say, it'll be a few years before every bank is coming online. I would say probably within a year at this point, within a year, 2 years.
In months here in the U.S., we're going to have a pretty solid sense of what the new rules are going to look like and be able to really operate within them to really expand and extend the use cases and bring more and more assets into the ecosystem. I mean, don't forget, right now, the entire crypto domain is still only about $3.5 trillion. And when you look at professionally managed assets, that's over 100 trillion.
All roughly $90 trillion worth of our assets, we're racing to actually bring that to production. We expect it much sooner than any of you think. And lending, repo transactions, securities lending transactions, margin transactions that settle in seconds. That's ultimately what will unlock the tipping point. And you're seeing it. We are very close to that point in the markets now, because there's so much demand. Inbound, we're hearing from everyone. People are gunning for these solutions at this point. And so it's an exciting time. There's not much time left for people who don't embrace this new technology, this new method, because everyone's at it now. And when everyone's at it and you address these core liquidity functions in the market, you'll be left behind if you're not able to keep.
It feels
You'll be left behind.
The fact that the DTCC dude Dan Donnie came out and said that is so powerful, bro. Like, you can't ignore any researcher now that tells you that, because you got the dude of a freaking organization that processes like $2 quadrillion annually telling you that this is about to happen at a very rapid pace, much faster than most people are anticipating. Again, it just requires patience. And what are you going to do in between now and this moment? Hopefully you're going to learn yield generation strategies. Hopefully you're going to learn how to preserve and grow your wealth and pass it on to your children without having to sell for freaking fiat. Yo, I can't.
Yeah.
Oh. Man.
And miss out with the continued growth, because like you were saying earlier, people who think that we're going to stay in this 4-year cycle, they're not really understanding what's coming next and what's already here. So those people who sell out for fiat, the first time they see super euphoria, I feel like there's just so much more time to come, like, to 2030 to 2035 and beyond. There's so much that needs to be tokenized, so much that needs to end up coming onto chain. It's not going to immediately come on. But, there is, from the sounds of it, there's going to be a lot of immediate trillions of dollars that will start coming on. But there's just how much money in the entire world with everything tokenized. I don't even know what that number really looks like, but eventually we'll get there.
Dude, we didn't even talk about real estate tokenization in today's call. Like, that alone within itself is hundreds of trillions of dollars that are about to come on chain. Man, like I said, this is as what's the word, as generic as it sounds, this is a once in a lifetime opportunity. And there are going to be, unfortunately, a lot of influencers that F it up for people because they're getting people to fixate on the wrong thing, which is that price appreciation in your portfolio, and then selling at some point in time for fiat is the only thing you should fixate on. Ain't wrong. You need to be focusing on strategies. You need to be focusing on learning fundamentals, understanding the market in which you're operating in and what are key drivers of risk on, risk off market sentiment, understanding what fundamentals underlying the infrastructure in crypto right now are actually moving prices. Literally all things that we cover in the CYPRX Wealth 28 Club and in the private Discord that are keeping our community 10,000 steps ahead of the curve. 10,000 steps ahead of the curve. We had a lot of people in the chat ask where to find us at. If you guys are new here, we really do appreciate you guys for coming out. We're going to end the stream. If you jumped into the stream late, sorry for you guys. Again, just go back, watch it. Great stuff today shared. We started it off with the SEC chair openly admitting that he believes that we as Americans should be able to stake and provide, liquidity, lending, borrowing. He said that word for word. You guys can go back and watch the beginning. I shared the transcript. And that video was from 15 hours ago, so relatively recent. Again, shout out to the CYPRX researchers. If you guys want to tap in with us, I'm going to show you guys where to find this real fast for anybody that's still listening in. So that way you guys go to the right resources and you find us on the right pages. So starting off with the CYPRX trading website. Okay. If you guys want to tap in with us, you can tap into all of our services directly through the CYPRX trading website. Here at the top, you guys have, again, just by visiting CYPRXtrading.com, the CYPRX Wealth 28 Club. This is where you're going to be able to find our suite, our entire suite of our DeFi University, hundreds of hours, honest to God, hundreds of hours, probably well over 200 video breakdowns now of us going into detail of what DeFi is, how to start to utilize it, how to start to learn about it. And then after the learning process, which is like a beginner to intermediate to advanced step, then we go into all of our Zoom calls, all of our breakdowns on protocols that we're interested in utilizing actively currently in the DeFi ecosystem to generate us yield. Learn from our mistakes. We record everything and we talk about everything. There's even a Zoom call in this Wealth 28 Club of one of the biggest losses that I've ever taken in the 9 years that I have in crypto. And you want to learn from that mistake, you again can go in and watch these videos so that way you don't have to lose capital. You just watch me do it and learn from it, right? It's so clutch. So that's the Wealth 28 Club, DeFi University, so much value there. And then if you guys want to tap into the private CYPRX Discord, you want institutional delta zones, dark pool information. We are the only community on the face of this internet that has a built out algorithm that taps into institutional resources that is provided via a institutional scalper in our community that has over 13 years of hedge fund experience. There's no other retail community on the face of the internet that has access to that information. We are hands down the only one. You guys want access to a whole entire global community of people from Australia, Mexico, Canada, United States, Switzerland. You guys have that access in the DeFi ecosystem. Hundreds of hours of crypto-related research that is non-mainstream. I'm talking about, guys and gals, I can hands down say this, that the CYPRX Discord has the most documented research out of any Discord on the face of the internet because of one person, one of our researchers in the CYPRX Discord who shares, I'd say probably on average, 50 updated documents from around the globe per day from large financial institutions, from firms like consulting firms, freaking regulatory infrastructure-based organizations like the BIS, IMF, organizations that I even haven't freaking heard from, organizations and jurisdictions that I didn't even know existed. This dude is sharing documents from these organizations to keep you on the loop with the digital transformation. In our private Discord, you guys have access to that. Fundamental breakdowns, Zoom calls. This week alone, how many Zoom calls do we have, Aqua? What, like 6 or 7?
Yeah, like 6 or 7 for sure.
Private Zoom calls that never get aired to the general public, where we're talking about fundamentals. We're going over DeFi developments. We're going over different DeFi strategies, all again available in the CYPRX private Discord. Try it out for a month, ladies and gentlemen. If you don't like the services, you guys can always cancel your subscription. That's why we created a subscription-based model for the people that want to take their education a step further. And if not, keep in mind that mentorship and paying for a paid service isn't for everybody. And we get that, which is why we're always constantly posting on X. So if you guys want to follow the free information, you guys can head over to Twitter. You can follow me on X. Make sure that you guys are following the right account. @CDemanicore is my Twitter. If you guys want to follow the CYPRX researchers, they're always dropping non-opinionated, non-biased research, all documented proof that we're going through a massive digital transformation. You got the CYPRX research team right here. Shout out to the CYPRX research team. And then you also have Mr. Aqua, right? You got all documented. Let's go show you guys his profile real fast so you guys can tap in. Mr. Aquaman 33, right? Currently has 13.4 thousand followers. There are a couple of impersonation accounts out there. It's unfortunate, but it's the era that we live in. So make sure you guys are following the right people. If you guys have any questions, we're always free to answer in the DMs. Shoot us a message, ask any questions. We'd love to have you on board. And again, if not, just make sure you guys are out there following the free resources. Both myself and Aqua are over on YouTube as well. So if we just go over here, you guys make sure that you're following us on YouTube for the free stuff. You guys got the CYPRX Superior Trading YouTube platform. I'm dropping a video pretty much every single day on topics that we discuss, documented proof. There's no hype, no hopium. We don't do any outrageous, unrealistic price projections. We just read documented research, panel discussions, keeping you guys in the loop with things that matter. That's my YouTube. And then if you type in Mr. Aqua 33, you got Mr. Aquaman's YouTube page as well, right? So go give us a follow. Again, the paid resources are not for everybody. You guys want just some of the free stuff, go tap in, lock in with us. It's free to do so. As always, many blessings to you guys. Aqua, that's all I got, man. Thanks for tapping in with me today, man.
Yeah, it's always a pleasure. Thank you. Yep.
Really great stuff. You guys and gals, everybody take it easy. We'll see you all next Friday.